Good morning, good evening, good afternoon, everybody. This was a crazy wild weekend. After a crazy wild week, a Friday, it's like nothing is stable. Volatility is back in crypto. We'll talk about the insane volatility, wild manipulation, some chaotic flows, frenzy treasury crap is happening like we've never seen before, and some crazy bad Orwell news and AI moves. So let's get into the story. But before we do jump in, links below for everybody here. You can watch on everybody's channels. And CTO, how are you this fine day?
Fantastic. Great to be back.
Yeah, a rocky weekend. Mando, you survived?
Yeah, I mean, it's just volatile, right? Like it went up and then we came straight back down. I still like the market here. I think we're fine.
Yep. Marty, we're going to talk about manipulation in a minute, but you doing okay? I think you might be on mute. Marty had the perfect mic and now it's gone. Marty.
Can you hear me now?
Yes, you're back.
There you go. No, it was a good weekend. Sunday was insane, obviously, with the whole community just trading and catching that bottom exactly on the liquidation level bottom. So it was unbelievable. 110, 500 hit, 45, 52, and 194.5 on Sol. Complete wipeout, royal flush by Binance, in my opinion. Beautiful. I think this opens up the door for the next move up.
Well, there are a couple of crazy things happening. Before we look at the quick chart of what happened over the weekend, I do want to share this one thing. We are seeing some disbursement happening, distribution. All cohorts are taking some off the table. Now, my question is, before we jump into all the other 25 stories, are they profit-taking or are they rotating into other assets? Like we're seeing signs of maybe a little bit of an old season happening with some crazy volumes, crazy moves. ETH hit an all-time high in the last 24 hours, which was long overdue. So things are good, but what do you see, CTO, in the chart before we get into all the Bitcoin and crypto news and AI news that's out there?
Yeah, let's look at the chart.
And boom.
So what we have here is that...
There.
Yeah, thank you. So what we have here is that we're retesting the previous resistance of 112,000. That was the high of the consolidation that we had through May and June. Remember this consolidation. The high of it was 112,000. And as often, previous resistance then turns into support. So it's exactly 112,000 that has then bounced one time, two times. These are separate days, 3, 4, 5, and today 6 times. So this level here, 112,000, is definitely acting as support, as you can see here. And I mean, so far it's still holding. Yeah, that's my base assumption. It's always that the supports will hold. Now it's held 6 times. Of course, you never know the 7th try, right? But it hasn't broken yet. Of course, if this level breaks here and we start falling down further into this volume segment here, the picture changes a little bit. But right now it has not turned down. There is no confirmed top pattern and support hasn't broken, but it's like on the edge here. So I am a little bit more wary than I was a couple of days ago because we keep testing the support, but as of now, it has not broken. There is still buying interest there at 112,000.
Anybody sniff any signs of rotation, Mando?
Yeah, I mean, there's clearly been a lot of talk about some big Bitcoin whales rotating into ETH. A lot of like institutional chatter has been about that. And what we saw today or over the weekend was kind of like linked to that. People have been saying, oh, big flows from Bitcoin to ETH. I don't think that's necessarily something to just worry about. That's kind of normally like short-term moves, in my opinion. I still think the setup for Bitcoin's is pretty strong, but what you've just shown there kind of agrees with that. It shows that there's been some distribution even from whale accounts. So I think this probably corresponds with what the price is, what we've seen. Like ETH has doubled while Bitcoin has gone sideways, maybe slightly lower. Me, that seems like a decent opportunity.
It's been an incredible move. We'll talk about that too, because that's gotten the attention of TradFi. But then we have the Treasuries. They're continuing to stack. They added 4,330 Bitcoin last week. 14 companies increased their hodl. So as we've been saying for a long time, the rest of the world is kind of selling, but treasuries are buying. Marty, what do you think about Bitcoin treasuries? We'll talk about the other treasuries in a second.
Yeah, just touching back on the previous thing. I mean, in my opinion, 110,500 was the 50% from the move. If you go on an 8-hour from the 21st of June to the top at 123,600, half of that is exactly 110,500. And that's what they will do. They will always take back 50% of every market make. So to me, that was the bottom of the range. That was the 50%. That was your long. And we hit it. So welcome. We're there. Now we go up. Yeah, we're following global liquidity. Definitely, Binance will always remove long leverage. That's just the way it is. But the catch-up should be fast. They will buy it back very fast. I think we're going to go up extremely fast. As far as treasuries go, we got 2 new treasuries today from Solana. ETH treasuries just loading up. I think we're seeing only the beginning of this momentous treasury movement. We've got a new buyer. They hold for 20 years. They're interested in share, it's a token per share. It's a whole new crypto world, in my opinion. We always knew this was coming, and I think it's becoming, and you can see the momentum, the snowball picking up. It just seems like every week we've got new announcements. These companies are building beautiful user interfaces, making unbelievable new partnerships, and they're adopting crypto like we did early. I think institutions are now in the same phase of the adoption cycle as we were last year or the year before. And we all know what happens. Once you get in crypto, you can't go back. So I only think it's just going to snowball bigger.
Yeah.
There we
Awesome.
go.
Well, we'll come back to treasuries and crypto in a second. But one thing that has got my attention, I've been very anti-CBDC and anything that's related to central bank digital currencies since the beginning of time, because I always call them Orwellian spy coins. But now, for the first time in the last 24 hours, we're beginning to see activities online. A lot of people are talking about it. Shout out to Carl Menger. He said, stack Bitcoin as if your freedom and your children's freedom depend on it, because they do. And referring to the WEF, this is very important. But then you now have articles. You got the people writing media saying, this is kind of funny because this central bank digital currency closes the George Orwell 1984 loop perfectly from a think tank, not just one individual writer. And basically, the reason I fear central bank digital currency so much is because of what happened in 2020, where governments tried to force things upon people that we will not get into, but they'll be able to control everything you do through money. And even George Orwell didn't nail this, but it's perfect for his vision of a dystopian world, where oppressive governments can control every aspect of human life through money, including public opinion, free speech, where you go, what you do, what you have to do, etc. A lot of people still think that, CBDC, it's nothing. It's just digital money. It's fine. Governments won't do anything bad with it. But I do want to raise the flag again of how dangerous this is. And we're seeing crazy stuff happen all over the world with governments. And we have the canary in the mine in China with their digital yuan. Mando, to you first. George Orwell, closing the loop. Is this a concern?
Yeah, I'm not a fan of CBDCs. I think they have the potential to be the most controlled form of money ever. And I'd be very wary of any government kind of going and supporting them. I do think we'll see them. I do think we'll see them in China and perhaps some of these other more controlled states. I've been happy that the US has kind of gone more down the private route, although it's clear that even companies like Circle are going to have quite a lot of oversight on them. So I don't think we're like fully away from this. I think this is something that crypto is going to have to slightly contend with here. There's a lot of like cheering for, we want the government to own as much Bitcoin as possible, or we want them to be as involved in crypto as possible. I mean, crypto to some extent is pretty anti-establishment, and there's a beauty in that. So I would be there's always two sides to the coin of these crypto being closer to government headlines, and you can read it badly in many scenarios.
What about Marty? What about the Finkster, Larry Fink, WEF interim head, and his 750,000 Bitcoin? That all roads seem to be converging around
Yeah, I mean, we've been talking about this for a while, guys. This is like 1944. The governments at 120% debt to GDP ratio have to turn to financial repression. And, you know, we've been talking about it and people in denial about it, even though they misunderstand that capital controls, which is the number one, you know, characteristic of financial repression, happen slowly. They desensitize you. They make you used to it. They start limiting your access to your assets. Your bank account will say you have $1 million, but you're going to need to take out $200 in the ATM. Okay, this is capital controls, and CBDC is, you know, any government that's interested in financial repression will lick their lips at CBDC because it's programmable money, therefore absolute capital controls. But remember, it has trade-offs. It can deter foreign investment, reduce efficiencies in the markets, and mostly it signals economic weakness, which harms investor confidence in that country. So it comes with both sides. But I think at the end of the day, we've always been preaching here to avoid financial repression. Put your wealth in self-custody. Self-custody crypto, not stable coins. Obviously, stable coins are great for everyday use, for payment, but don't store your money in it. And, you know, physical gold. Everything else is completely vulnerable to capital controls. Anything regulated by the government. Even stock, you can have 10,000 shares of MicroStrategies, but they can say to Robinhood, people can only, you know, sell $500 a day. That's coming.
Yep.
So yeah, CBDC is always going to be a problem, especially when you have a debt to GDP ratio this high, in my opinion.
CTO, where does Era Digitalis and CBDC connect?
Yeah, I mean, it's very interesting. There's, of course, I grew up in you know, the 80s, and cash provided a lot of freedom, actually. The very little oversight. And then Bitcoin has come along, kind of similar to that you can, of course, you have to, it's traceable in a way that cash was not, but you don't need to ask for permission first. While CBDC is very similar to a bank today, like a bank account. The bank might not let you withdraw the money. They might not let you transfer the money from this place to that place before you provide evidence of what it's for, and so on and so forth. And CBDC will be very similar to that. It will be ask permission first before you can do anything. And if they don't like it, they can take your money. Same like from the bank account today. And I mean, this is not some conspiracy theory. We have countries in Western Europe where that happened just, 12 years ago. One country, they kind of went bankrupt because they bought a lot of bonds. The bonds went down. And what is the solution? They took 50% from everyone's bank accounts in the country.
Correct.
50% of everyone's money. And problem solved. You know, balance sheet, balance again. Okay, not so fun for those who had those bank accounts. So CBDC is kind of like that. There will be an element of control. They can take out the money, they can block it, they can stop you from transferring to places or purposes that they don't like. Typically, like it is in the bank today. If you want to do something, they will ask what is the money for, and you have to show evidence of that. So that would be CBDC. And then on the other hand is the self-custody, Bitcoin, DeFi, that movement where you can do stuff, and if you've done something illegal, they will chase you afterwards, but it's not a blocker before you do something. And who of these will win? I have a feeling that both of these ecosystems will exist in parallel. I think there will still be attempts, maybe not in the current US government, because there's a very strong support for Bitcoin and Ethereum and, you know, all the DeFi ethos from the Trump family, because I think they suffered a bit from this, from what I understood.
Correct.
So it's not going to happen in the US now, but, you know, maybe in the future, if the political interest is in a different direction, maybe in Europe, maybe in countries in other parts of the world, this could come back. They try to ban it again and say that you have to use only the bank, only the CBDC, where we can totally control, and then there will be this kind of dynamic, as we've seen over the past almost like a decade now. And I hope that both of these will continue, and I think so. I think both these ecosystems will continue in parallel.
Yeah, good stuff. Let's get on to our next story. Mando, this is you. M2 versus Bitcoin, the biggest deviation from global M2 correlation in 2 years. You feel this is a buying opportunity. The question I have for you is it a buying opportunity? And number two, is the price being artificially pushed down? And then we'll get to what happened over the weekend with Marty as well, with that big dump. Was it really a dump? Mando.
Yeah, I think actually it's the biggest deviation in a lot longer than 4 years. And this has been a this correlation goes on for much longer than these last 2 years. I think Bitcoin looks okay here. Like, I continue to think that. I mean, obviously, I was very bullish ETH. I then converted about 60%, maybe 65% now of my ETH to Bitcoin. I just think Bitcoin looks like it's going to follow that trend pretty nicely to me. I don't know what the bearish case really is for Bitcoin, other than right now you have some people switching from Bitcoin to ETH. Well, we've spoken about this before, like technical trades versus fundamental trades. And technical trades are often like short term, like, oh, it's one big person doing this, and that's what's causing the trade to happen. And then that leads to like big deviations from where it kind of things often are meant to be, or like respected correlations, and that looks like it's there right now. So I like Bitcoin for the next few months. I think it's going to be a good trade. I think we'll catch up to global liquidity as money printing continues to go higher, and we're going to see rate cuts. So I really do like the trade in majors. I think once you get away from majors, I think it becomes more difficult. Like I like JLP again, interestingly. Now that trade, which is like a basket of majors, and has some stablecoin exposure. I like majors right now, but particularly Bitcoin.
Interesting. And we've seen as well some crazy stuff happening. The ATM has been turned on again from MicroStrategy, which we knew there's no way they were going to get to NAV premium 2.5. That wasn't going to happen. So they tapped the ATM again and bought another 3,500 or 3,000 Bitcoin approximately just over the weekend. But Marty, I want to talk to you about the so-called 26,000 or whatever it was, which is, considering there's never going to be more than 15 million Bitcoin, that's a 0.2% of Bitcoin. People say it was dumped. You say it was transferred. Where does the truth lie? Because that took us down a lot. And my theory was,
go ahead first.
If somebody is going to dump that amount of Bitcoin, they know what's going to happen on a Sunday. The price will tank 3,000 or 4,000. So why not dump it on the open markets and then have 100x perp short at the same time to get all your money back?
Yeah, it's a weird one. I mean, I tracked it down on Arcam all the way back. It's a 5-year-old wallet. They bought 23,000 Bitcoin off HTX 5 years ago. They've sent so far, I'm tracking it right now, it's wallet RK 1K BTV. They sent 8,000 Bitcoin over the last 20 hours to Hyperunit. Hyperunit it's a transfer to Hyperunit, which is a centralized bridge of Hyperliquid. So the Bitcoin is just sitting in Hyperunit's deposit. It is not sold. It's just sitting there. And on the other side, on Hyperliquid, they get a derivative called OBTC, which they can trade. So in my opinion, this is just a whale cutting off 8,000 of their 23,000 Bitcoin, probably opening long at the right time. They're waiting for the dip, probably following my liquidation levels.
So transfer, rattle the market, and then perp it.
Yeah, I think they just want to go along with a small piece of their 23,000, which is a great strategy. Why wouldn't you? There's no evidence they sold it. Remember, this is the problem, people. When you go to permissioned architectures, you lose transparency. So we can see it goes to Hyperunit, and that's it. We don't know from there. We can't tell on Hyperunit, on Hyperliquid what's happening. We can't tell on Binance. Can't tell on Coinbase. So it's all speculation and creates a narrative. And people run with the narrative. I mean, I've seen posts on the feed all day that they sold all 23,000, which is just not true. I look at the chain. It's on chain. They sold 8,000. Well, they didn't sell it. Sorry. They sent 8,000 to Hyperunit. 5 hours, 18 hours, 19 hours, and 20 hours ago. There you go. So very careful about the speculation.
It's an interesting day to do it. That's what I would say. Like when I saw it this morning, the UK, it's a bank holiday in the UK. And if you know, many of the major market makers are UK based, Wintermute included, right? They're often ex-FX traders, and London is generally still the biggest market in the world for FX. So I just thought it was interesting that they chose to do it in the European morning on a UK bank holiday. That made me think it was more we're going to do something loud here and cause a bit of a dip. That's what
And my theory is to play the other side of the trade too. They know.
I mean, can you share my? I'm trying to share a screen. Can you show it? Just try.
I can.
Okay, this is my liquidation level chart. Now, this is just reading Binance liquidation levels from their API. The blue lines at the bottom show you the lowest 25x on each asset. You can see there. Look at the numbers. I just put the numbers of the low numbers: 110, 500, 195 Sol, 4538 ETH. Now, you got to tell me what numbers were hit today.
Those numbers.
Exactly those numbers to the cent. Yeah. So I'm sorry, that's not random. This is Binance. This is what they do. They flush the market to take out all the leverage positions on the 32nd. It happens like clockwork. I don't believe it had anything to do with that whale, in my opinion.
CTO, what is your opinion?
I can show you. This was the before. Do you want to see the after?
Sure.
Let's go find the after. Here we go. And whack. This was the after. Bam. That's 100% predictable based on these things. And then you can see today all the way to where we are now, where it came down and actually just got those final blue lines. They wouldn't even leave those. So in my opinion, it's highly manipulated, always has been, will be until they pass market structure. And, you know, a lot of people will deny that, and that's fine. But as traders using the strategy, you can extract money from Binance. And why wouldn't you? And it works extremely well. It's about 90% successful at this point.
That's it. To beat them, you got to play their game. CTO, thoughts?
Yeah, I mean, if someone sells that much in one go, it's no doubt intentional to try to drive down the price. There is no doubt about that. Otherwise, you would sell slowly and carefully, try not to move the price so you get as high price as possible, right? You don't want to get lower price for your sales. So for sure, it was an intentional effort to drive down the price. I actually thought that they sold it. So it was very interesting because I calculated a little bit. If they drove down the market cap of Bitcoin by 4%. So with about 2.7 billion, that means that price moved 30 to 35 times more than the market cap moved down that much more than the money they sold. We talked about that several times, what the factor is, if it's around 50 or something. So I think it's still the case, and the factor is even higher than if they in fact didn't sell all of it, like Marty said now.
Yeah.
So
I mean, obviously, in my opinion, it could have been an old HTX wallet and a centralized exchange.
The point is that it doesn't take that much money to drive the price. Correct. It's not the amount of market cap that changes. It doesn't take that much, which we could see here. Even if they hypothetically sold everything, the price moved or the market cap reduced 30 times more than the amount of money that they sold. And if in fact they only sold a third of it, it moved 100 times then. So I think this is some kind of manipulation, and that's why, I mean, the key support is still holding. The market structure didn't really change. So if this holds here, it's fine now. But if this support starts breaking, the picture changes a little bit. But we're not there now. And then it's very interesting to see what's happening with altcoins. But we will talk about that later.
We'll get into that now. Let's talk about following the money for a second. So we look at the global M2 money and the disjoint from Bitcoin price. Now we've seen a lot of flow. Despite all the activity on Ethereum, a lot of money is still being drained out of the Ethereum ecosystem into Solana. And here you see over the last 7 days, 280 million bridge from other chains to Solana, including 155 million from Ethereum. The point I'm trying to make here is all of the price action we're seeing for things like Bitcoin and Ethereum is driven by treasuries. It's not driven by retail investors. And then we had this crazy news. We got Galaxy now trying to raise $1 billion. This deal has been run by Cantor Fitzgerald. Think CEP. Think their big Bitcoin bag. They're going full on across the gamut of crypto. But they're going to work with Galaxy and Multicoin Capital, etc., to raise $1 billion to buy as much as they can. And remember from Ricardo here, when you see moves like this is a narrative shift. And these institutions aren't in it for 10% or 50%. They're in it for outsized gains, and they're not late. So a lot of people believe this is still early. Then Sharps Technology want to be the biggest solid digital asset strategy firm out there, 400 million new money coming into it. And DeFi Dev also stacking more, another 125 million. You add these up, all right? This is the interesting math part for me. You add these up, it's 1.55 billion of buy pressure announced in the last 24 hours. And when you divide that by the average DCA amount for retail investor, that's about 38 to 40 million retail investors DCAing into Solana in a week. These guys are doing it in 24 hours. What will that do to the price? And
yeah, I'm very excited here. So can I start with 2 charts? I will promise not talk so long. So here is, let's recap again. This is Ethereum to BTC. We talked about it here, guys, when this bottom was building, and then basically you had to be blind to see that to miss that this is changing direction. It was clear as day when it happened. We talked about it here. Now maybe we're seeing the same thing happening here on the SOL to BTC chart, because this has also been, everyone's been really depressed for very long, the entire 2025, just negative news, head and shoulder top, downtrend, and depression. But look here now, these support levels started holding, we're getting higher lows, higher lows, higher lows, higher lows, trend turns up, and it's a very similar picture that starts painting here as we saw on the ETH BTC a couple of months ago. So I'm very excited here. I think it's time to start paying attention to Solana again. And one other key chart will be this one. This was the SOL to ETH, that where SOL went up very clearly. Again, almost have to be blind to not see where this was going. Then it changed direction. Ethereum started gaining. But let's look now and see if this one starts moving in that direction instead. That would indicate rotation from the ETH trade over to the SOL trade. And with these announcements coming now, that would kind of give the narrative for the price move. So I'm very excited about the SOL to BTC chart. I think it's time to start paying attention to that one here. Yeah, because this is a trend change.
Yeah, very good points. And my simple math, because I do these things called multipliers for years, if $1.5 billion comes into Solana over the space of 2 weeks and nearly 70% is staked, the multiplier will be at least somewhere between 20 and 30. That's going to increase the price. $100 billion market cap will go to 130 billion plus, which is a 30% gain from where we are now. That's just logic. And that's what TradFi sees. They've seen what Tom Lee did with Ethereum. He drove that Ethereum bus. It's not retail investors. It's not maybe a little bit of rotation from Bitcoin whales into Ethereum. But we are seeing the signs of the mechanics of alt season. As Mando, you talk about Bitcoin, the mothership, then the money flows down to the next biggest asset, which is Ethereum, and then it goes to the next biggest asset, which is Solana, and then it goes to whatever down out the risk curve. Do you all agree we're seeing signs of an alt season, but it's early? And the danger is alt season typically lasts only a couple of weeks. What's going on here? Is this time different, or could it all be over in 2 to 4 weeks? Mando.
Yeah, we are definitely seeing signs of a little bit of an alt season. It's not going too far down the tail, I would say. It's sticking to the majors. But the fact that Bitcoin dominance is kind of held below 60% right now, and ETH just hit an all-time high, you'd be unsurprised to see maybe the rest of like the top 10, particularly those with DAT strategies around them, of which Solana is probably the strongest, would see a bit of a move here. So I do like going down the risk curve slightly, at least from ETH. I did rotate some of my ETH into Link because I quite like that trade. But it's difficult to say how long these sort of things last for. What we have seen is this has been a much longer period of Bitcoin underperformance than we've seen in many, many months. And these DAT strategy trades, I think, if you catch them at the right time, can be very, very good. I think Solana's outperformance more recently was to do with these DATs. And if we start to see massive shelves get fired, like 10 billion plus of buys to come, then we could see a very strong performance. The DAT trade has become slightly looser, I think, in terms of it being it's not as strong as it was maybe a month ago, because the MNAVs of these companies is trading much closer to 1. So hopefully they get it done all in time and get a big shelf basically filed before any of these start to trade decently below 1.
Awesome. Good stuff. We have another interesting phenomenon happening too, and it's not in equities. I always say stock buybacks are bad, but in crypto, it's a little bit different. I don't know if you guys saw this data coming out, but basically buybacks are happening. We saw what happened with OKX last week. They decided to burn 52% of their supply, cap it at 21 million, and we saw the price basically it did nothing for 5 years, and then it went up 4x. This is now big chains are trying to harden their tokenomics to make themselves more attractive. And over the last 90 days, we had nearly $1/3 billion went into buybacks. These are tokens spending their revenue that they make to buy tokens back to reduce the supply. And if we look at some of this data here, you'll see crazy numbers. First of all, Hype is the largest, and Sol projects make up the other 38%. Things like Bonk, Jupiter, etc. Hype, and the Ethereum projects are not buying anything back, which is kind of unusual, and I'm not sure why that is. But what do you guys think of this? These projects, these protocols, buying their stuff back. Marty, to you first.
I mean, this is pretty notable in the stock market, right? Apple, Google, Meta, Nvidia, they all buy back their stock. So it's a really good system for, stabilizing your price, increasing investor value. I think it's a great thing. I think it's the one thing Hyperliquid does well. I think that was a great model. Always applauded that. Buying back your tokens, a great idea with your profits, putting back into
the chains that are doing this are making unbelievable money as well. So
yeah, I mean, it's always been the question, why didn't Pump.Fund do this? And if they're listening to the call, I'd like an answer. They should have been doing this from the beginning.
They do this now, for sure.
But not to the degree of Hyperliquid.
I think they buy back 80% of the 80%, and Hype is at the moment 100% of the revenue.
Yeah.
So they definitely turned it on.
But yeah, I think this is something moving forward we're going to see more of, just like on the stock market. I mean, the Mag 7 are really what they are because they buy back their stock.
And it's all, what it really does, it does help put in that floor on price, stabilize the price, but also hardens the asset, which drives price. Mando, as a TradFi guy like me, good or bad strategy?
I think it's kind of the only strategy long term, and we're starting to see a lot more firms or protocols at least move to do this. This trade for a lot of these is the token launchpad trade, which is very, very strong on Solana. So Pump Fund, Bonk, Radium, Jupiter has these are all launch pads at the moment, and that largely doesn't happen on ETH at least. There's some of this happening on Base, but it's mainly been a Solana trade. And then Hyperliquid, this is kind of the whole selling point of Hyperliquid. This will spread. This will spread. I think this time in 2 years, we'll see the vast majority of DeFi protocols move to do this.
Yeah, CTO, I know you've got Radium bags. I have a little bit of Radium. I've got Jupiter. I've got Hype. What do you think of this all?
Yeah, we talked about it here. Was it half a year ago? I don't understand, and I never understood why more projects were not doing this. I think we talked about it 2 years ago or something. We just calculated the example on Bitcoin, right? The most liquid asset in the crypto ecosystem and one of the most liquid assets in the world. Price moved 30 times the money. Market cap moved 30 times the money. So if some of these projects have a big treasury, they could literally take some of that money, buy the token, and the value of their treasury would increase like 50 to 100 times as much as the money they spent, because the tokens are pretty illiquid. So why weren't they doing that? I never really got it, because it seems such a great thing to do. Then they have more capital. They could even take a loan and kind of do it in a circle until the music stops, at least, which many of these projects would be totally fine with. So I think they just haven't thought about it. It's such an obvious good thing to do from their perspective to to drive momentum and drive price. And as we know, the best marketing in crypto is price action. So it becomes like self-reinforcing almost. And I think just like you guys said here, I think all the projects are going to do this. The Solana projects and Hyperliquid are front runners here. And everyone will do it when they figure it out.
Awesome. We also have a lot of questions regarding stablecoins. We know that, of course, Mr. Besant, his job is to sell treasuries. Treasuries are having a hard time selling, not only in the US, but also in the UK and other places, where the long end is now selling for over 5%, which means people do not want to touch these treasuries at a 4.5% return. And governments are finding a hard time controlling this. But this is why they're all pumping into treasury or to stable coins, and why nations now are kind of doing nation state FOMO into building their own stable coins. You got yens, and maybe South Korea is planning one. UK is probably planning one, the EU. But what I want to get at is, as usual, winner takes most. First of all, if you look at all the stable coin action, all the stable coin supply, the top 20 are all dollar denominated. There's not one in the top 20 that's euro denominated, first of all. So why all the dollars? Second of all, winner takes most. Tether and Circle dominate. They basically 95% of everything is on Tether and Circle. Any thoughts on how this could go? We know we're looking at multi-trillions in the next couple of years in stable coins. Who will win the day, and will this change? Mando, I see you smiling.
I'm super bullish on the dollar, actually. When it comes to fiat currencies, I'm bullish on the dollar. The one reason is the US Army, and the second reason is things like this. They're embracing the use of new technologies, and I think stablecoins will be one of the biggest sources of demand for treasuries. Besant is coming out and saying exactly that. If they make dollar the denomination of crypto, they could potentially make the dollar the strongest form of fiat currency left and provide a demand for their own debt. So I think this is super smart, and I'm just shocked at how other countries have been so slow to pick up on it.
Marty, thoughts on this one?
Yeah, I agree with Mando. I think, well, in my opinion, Tether is going to win just because it's going to be the conduit for introducing extreme dollar dominance across the world, emerging markets outside the USA. I mean, like Jack Mallard will say, within the USA, why do I need a stable coin? I have the dollar. I think Circle within the USA will probably dominate. But like he said, the US is trying, Besant has said it publicly, he's trying to make the denominator of all crypto a US-backed stable coin. And that's what they're doing. Just remember, we're at about 300 billion right now. That's a third of a trillion. If you look at the chart, it's going parabolic, following global liquidity. So it's clear that they're moving, debt-based monetary vehicles into stablecoin and hard money-based crypto vehicles. And so there's a combination of money going to Bitcoin and into stablecoin, kind of in parallel. And just like Jack Mallard says, you'll probably find over time that sort of market cap almost balances out. So the total Bitcoin market cap equals the total stablecoin market cap, just because Bitcoin is pretty much priced in stablecoin already. So I think Tether will win. Honestly, we just saw the news from Paolo that they're now creating a US-specific Tether to meet US Genius Act regulations. I think that's going to be a game changer. That'll give direct competition to Circle. But at the end of the day, these companies become the buyer of last resort for US treasuries, which are, as Mando said, very under demand. So I think it's a monetary policy play, a fiscal policy play. The government loves it, and it's happening. The next question is, will the banks issue white-labeled Circle and Tether, or will they try and run off and make their own stable coins? And that's the big question. We don't know yet. We know JP Morgan ran off and made their own chain and was a massive failure. So it's clear that they'll be on public networks. And then we saw Circle obviously also making their own ARC network, clearly probably to make revenue, just because when interest rates go down, their revenues go down with it. And that's an interesting topic maybe we want to talk about, is when the interest rates start going down in September, these stablecoin companies make their money by earning interest on the treasury. So they go down. Fortunately,
I calculated that for Circle. If the rates come down by 50 basis points, Circle stands to lose about 12% of revenue. So it's not catastrophic, But it is a bite out of that too. And in fact, another interesting thing that happened last week, everybody's wondering, well, we all know why the markets were on fire last Friday, but this guy, Jerome Powell, has been completely browbeaten. Everybody's kicking the heck out of him. And this from the Financial Times. Basically, the public has no confidence in Jerome Powell anymore. He's like, he wanted to have his, what was the guy? The Volcker legacy of being the guy in control of inflation with a hard hammer. But no, inflation beat him, as we've always said. So that's good news, and that's what really fired up the markets. And we got some macro stuff next week before we get onto the AI story of the segment. But big news is NVIDIA earnings next week. AI, all eyes will be on that, because what was interesting last week is everybody said, oh, the AI bubble has burst. Have you seen the demand for things? All rattled because China said no more H2O, NVIDIA machines, buy local, etc. Chinese worry about the Americans spying on them with the hardware. Forget that. But what's interesting is China now makes roads with bots. They just built 157 kilometers of highway with 0 humans, okay? That is pretty impressive. If you've ever driven in California, all you see is roadworks everywhere you go. and there's 50 guys, and no offense to them at all, but they're all standing around, and we rarely see them actively doing stuff. So what'll happen when bots are now making roads? People thought the trades would be safe, but then this is the $1 trillion cut. We now have Fortune magazine talking about Morgan Stanley saying corporate America is on the brink of a radical transformation as artificial intelligence adoption could unlock $1 trillion a year in savings. We've already seen earnings for top AI companies doing very well because they're leveraging AI. And the bank calculates that 90% of jobs will be touched in some way or another by AI or automation, or cost savings from reduced headcount, natural attrition, or bots, or agents, or whatever else. It's worth talking about this a little bit too, for Morgan Stanley to come out and say this. It's big. CTO, to you first, Mr. Era Digitalis.
Yeah, definitely. I mean, there will be cost savings, no doubt. Everyone can understand that. Everyone who's tried AI know that it's cheaper, faster, better. So no doubt. Then what happens? But if everyone get the same cost savings, perhaps prices will also drop, right? And that could actually reduce inflation. So because we're used to everything going up in price, but with these kind of cost savings, there will be a cost saving across many industries, no doubt. And that could be favorable for the price. Then you talked about many things, James. One was this, people say lack of demand. Elon Musk tweeted yesterday that he estimates 50 million H100 equivalent in 5 years in terms of demand. I tried to figure out how much NVIDIA produced today. Maybe it's like 6 million a year, something like that. So there will be enormous demand for AI hardware going forward. That hasn't changed, right? There was a discussion, was it about half a year ago, that maybe the models will get so much more efficient, so we don't need a lot of hardware. But that doesn't seem to be the case, based on at least Elon Musk yesterday, who is maybe one of the best to listen to here. So I think there will be continued high demand for AI hardware. We will have cost savings in a lot of S&P 500 companies, which initially could lead to profit boost, then over time, perhaps price reductions.
It's interesting as well, because Elon did come out, first of all, the 50 million H100 equivalents, he rechecked his math and said it's actually correct. And he's going to be buying as much of that as he possibly can. But then he also came out with a little hopium hit. It's like everybody's going to have super universal income. There'll be abundance and best healthcare in the world and the best food and the best luxuries. I do not buy into that, because that's not how markets work. Winners take most and wealth concentrates at the top. Somebody steel man me on that one. Is Elon off his rocker saying there'll be super abundance for everybody?
I mean, in a way it will be, right? Like if we look back 100 years, like the king of France couldn't save their children from dying. Today, everyone in the world almost can get antibiotics. So in a way, the world has gotten more abundant. We have more. Most people in the world have enough food, basic health care, and water, and children are not dying on the streets anymore. So in a way, we have gotten it more abundant, and perhaps it will continue in that direction, but seen over a very long period of time. I think the near term, it will get rough. I think some people with capital leverage and maybe people here on the show, I think many of us will benefit greatly from this. A lot of people will find a very difficult awakening. They will get fired from their jobs. They will be unable to get something similar. They're sitting in a big, expensive house, big car, and they don't have any money. I think it will get very rough for a lot of people, but maybe seen over a long period of time. Decades, perhaps he is right, but I don't think to that extent.
Exactly, the time frame. Mando, thoughts on this super abundant future?
Yeah, I think we're already feeling it, right? I feel as though the economic impact of AI is absolutely massive. People are just debating whether AI stocks are going to be the ones that really necessarily can harness or keep that economic impact. There's a lot of hyper competition when you start adding in AI, and a lot of different companies aiming for the same goal, and a debate about open source versus closed and efficiency of models and all this sort of stuff. So I think what we will see in the future is a clearer picture on the winners and losers potentially. And I'm sure a lot of people have been spending money on AI similar to that they spent money in the .com era, and they're going to lose, and they're probably going to lose pretty spectacularly. But the absolute impact of this is going to be absolutely massive. I don't see slowing demand.
So one of the things, before we go to Marty on this one, one of the things that I've noticed is back in the .com bust in the late 90s, 2000s, you saw for the first time ever technology hitting about 20% of the S&P 500. Now it's about 30%. I see tech companies, AI companies, disruptive companies making up to 60% of the S&P 500, and the other 40% will be zombies that are completely disrupted. I mean, if you look at, there is now a global internet telco system. What are all the broadband providers going to do around the world? I mean, they're about to be undercut, and nobody's talking about that. Marty, what do you reckon? Is this all hocus
we've been
pocus?
talking about this for a long time. Absolutely. I think we're going through a technocratic revolution. It's a second industrial revolution. The beneficiaries will be corporations. They'll make more profit with less humans. The government's a huge beneficiary of technology like AI, automation. Look at China making roads without people. And blockchain. I mean, blockchain, the efficiencies are across the board. Governments actually benefit the most. So corporations, governments, and business will make more money with less people. So what do people do? And so obviously the answer is, there's going to be, just like any revolution, a complete shift in cultural perspective. And that is, your job will no longer be the reason for living. You'll find other reasons to live. I call it the Great Renaissance. Now, I mean, if you look at McKinsey, they say 30% of jobs will be eliminated by automation by 2030, right? That's 4 years' time. I think it's much higher than that. I think low-skilled workers are the highest risk, obviously. Low IQ jobs. Specialized jobs will probably do a little bit better. But I think the biggest problem is, like you just said, economic inequality will widen radically and really fast unless there's proactive intervention. So we need proactive intervention. And I've been saying this on the show now for, 6 episodes. We don't see any politicians talking about this. What are people going to do if you take away their jobs? It's literally their reason for being alive. They base their success on it, their emotional systems, their ambition, the reason for getting up in the morning. Since the World War and the Great New Deal, work became the reason to be alive. It was the measuring stick of life. And now we're going into an era where that'll change. And will we turn to art? Will we have a universal basic income and go back to yoga? What is going to happen to the human race? And that's what I'd like to see more people in power start talking about. And I think Elon Musk talking about it is a good thing, James.
It's funny, Marty, men actually suffer far worse than women in that regard that you mentioned. They need a purpose in life.
We're going to be fine. We're going to be yoga teachers.
Okay. Jobber Walker asks, I'm going to do a couple of quick questions because for the first time ever, we have some extra time. If everybody's if bots will take everybody's jobs, who's going to be able to pay for stuff? And that is basically, if you look at major Western nations, half of the population in many nations are in one form or another dependent on government handouts, either through medical payments, food stamps, pensions, free schooling. They work for the government, etc. It's half. In parts of Europe, it's even more than half. And that's what's happening. That's what I call the UBI nation. Everybody will be living on handouts. How much luxury will they be able to afford? I don't know. The WEF has a plan for that. You'll be able to share cars and share underwear and stuff. So you may not have a lot. But bring your questions. There was a question here. Somebody wants to know, does Marty own Jupiter? Can't remember where it's gone. Marty, do you own Jupiter?
Yeah, I mean, just to be clear, I've stated everywhere, I'm transparent. I buy crypto. I will not sell crypto till the top of the business cycle, which is, we're changing all the time, but probably Q2, Q3, 2026. I bought Jupiter early on. I ain't selling any crypto.
Okay.
Why would you? I'm not selling into a depreciating asset. I do trade. We all trade. I mean, I'm trading all the time. And with that, I buy more crypto. That's where I am.
I think Cosmos Lover, by the way, is in India, if I'm not mistaken. Sui is snailing Marty. What's going on? And then Marty, another few. Is Marty still on Zeus? Yes, he is.
Yes, I still own every single Zeus. Never sold a Zeus.
Yeah.
I love that project.
So questions for Mando, me, CTO. Come on, hit us up. Ray, a question about radium. And CTO, I know you still have radium. I have some radium. Anybody else have radium?
I love radium. I got a lot of radium from back in the day. I bought it all when it was dirt cheap.
Yeah. Good. Yes, India. We've got India who are up very early or late now, right now. Question, Sol or MicroStrategy? That's a tough one. I think Sol will outperform for the next. We're going into a crazy time, by the way, right now for Solana. We have we got the phone coming out. Then we have the breakpoint in Dubai. It's going to be the biggest breakpoint ever. We have all these treasuries coming out at the same time. Abu Dhabi, sorry. I always screw up with that.
Hardly different thing.
Yeah, exactly. But lots of big stuff happening out there in Solana land. We're seeing rotations. We're seeing these treasuries. I think that's going to have a big impact. MicroStrategy is a function of two things, everybody: the Bitcoin price and the NAV premium. They need that to come back. And for a sailor to come back and basically ATM at a NAV premium about 1.45 shows you he's going to keep hitting that machine and keep buying Bitcoin. And he alone can keep the Bitcoin price up, by the way, with the amount of access to fiat rails.
James, I have a question. There's been a lot of fear mongering on social media that the sailor buy will kind of start trailing off. Do you see that? Or?
Well, he can't buy at the same rate because Bitcoin's now much more expensive. So it's a lot harder to build a bag. He also owns 630,000 Bitcoin right now, which is 3% of the supply. It's very hard to grow to 4% of the supply at this stage of the game. That's why he's got the first mover advantage. But he'll continue to chip away. Buy 3,000, 5,000, maybe in a big week, could be 10,000 Bitcoin. That's going to continue. But the pace of stacking will gradually decline because that's what happens when the price goes up and the scarcity goes up too. That's my take.
I mean, also remember
there is one other theory, the back end that I'm always thinking about. If there is a Bitcoin supply crunch, if there's no more on the OTC desks and people are trying to get exposure to Bitcoin, they're going to FOMO into MicroStrategy and that'll pump the NAV premium to the moon. Sorry, final thought.
That's correct. Also, with regard to Solana, remember there's now 9 ETFs which are not allowed to buy Sol yet, which will all have to buy their seed baskets coming up over the next months. That's a massive buying event as well. And then you've obviously got these treasury companies. I think Solana is just going to have a lot of accumulation over the next months. And I see it at around 300 by the end of the year easily.
And also the tech upgrades too. They have the biggest tech upgrades in history coming to the chain, which will basically, Alpenglow and so much more. That's going to put them further ahead in the DeFi space, which is a massive use case.
Yep, undeniable. I mean, Sui got listed on Robinhood. There was a big event for Sui, and they've got some major breakthroughs and major announcements coming up, which I can't share. But I'm doing the official spaces now. If you didn't listen to the one, you should listen to the last one with Denny, the founder. Amazing stuff. Big fan.
And this is a J for all. I think that's Justice for All. It must be a Metallica fan, if I'm not mistaken. This is the question of decentralization and treasuries and ETFs. Larry Fink, 750,000 Bitcoin in his control. And people think, the retail investors think they own that ETF, they own the Bitcoin. They don't. They own a share that's distributed by BlackRock. And this is the whole thing, that we have to be very paranoid about the WEF and centralized control versus decentralization. Yes, Bitcoin's decentralized, but maybe not when all the treasuries and the ETFs own a ton. Take on that, Mando?
Yeah, I think Bitcoin's definitely become more centralized in the last 12 months. It maybe not be as obvious, but it's very clear that ETFs have big holdings, and these treasury companies also have big holdings, and governments have become more involved directly in Bitcoin. So I think Bitcoin has slightly drifted away from being more decentralized over the last 12 months. I don't know if it's like at the stage yet where we need to really worry about it. I think we've spoken about how difficult it is. I mean, MicroStrategy has spent years trying to get a massive holding, and it's around 2% to get three. So to get above 5 would be very, very difficult for anyone still. So
BlackRock can do it.
BlackRock can do it. BlackRock can do it. That's true.
Yeah,
that's probably the most obvious.
So this is the other thing that people are very afraid of, is the tax man. And we're seeing very creative ways of governments finding ways to tax their citizens, and they'll do even more of that as their deficits explode. But now I think we're at the stage where borrowing against your crypto is actually very mature. And the way the super rich continue to get richer and richer is they never spend anything and they never sell anything. They just borrow against their assets. So if you are interested in not paying taxes on your massive crypto gains or whatever else, think about borrowing against your crypto or hedging it for downturns. Any thoughts on that, anybody, from Way Too Fast?
I think borrow if you need to. I think that's probably one of the best ways to not realize capital gains. I mean, there's many different ways, right? Like, it depends on what jurisdiction you are in, but in the US, that feels like kind of the only way I think you can minimize your tax impact.
Yeah, lots of questions regarding Rectember. Rectember is the worst month for crypto, bar none. However, I will tell you this, everything has shifted a little bit to the left, i.e. things are happening earlier. Technically, we could have seen some of the Rectember crash happening in late August. And remember, it's only the first 2 weeks of September that are bad. After that, it's good. And we head into October and then Moonvember. October is typically the second best month, and Moonvember is bonkers, absolutely bonkers, if history repeats. What do you guys think? Should people be hunkering down for the first 2 weeks in September? Will they get wrecked?
I think you tend to see very high volatility in September. That's one thing that you always see. That doesn't necessarily mean the prices go down. I think last September we gapped higher, right? It was quite a strong month last year. So just expect more volatility. I've been surprised at over these last couple of weeks how high crypto volatility has been versus macro volatility. You know, stocks are just kind of drifting towards all-time high again, and crypto is going poof, 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 poof. I think macro volatility normally picks up in September, so hopefully that doesn't cause too much panic in crypto markets.
Yeah, and then
remember September 17th is the rate cut schedule starts. I believe it's a 92% probability. So that's going to definitely always historically cause volatility, as well as obviously altcoin season turning around, you know, Bitcoin pair trading into alts and back. So you got a lot of activity in September that could cause volatility. So I would agree, September could be highly volatile. Great for traders, for everybody else just holding, hold on to your bootstraps, don't panic. This is all perfectly normal.
87% chance. 87%
Loomis said
chance.
market structure by Christmas. Did you hear that, Loomis? She said market structure will get passed by Christmas. That to me is the big event. Once they approve the market structure and finally declare securities and commodities and regulation and what is you know, how to register guidelines, I think we're going to see a 2x in Bitcoin pretty fast after that.
Wow. Sanyal, question: how to avoid taxes rather than selling MicroStrategy? Yeah, you can ride a leap at the money on a big spike. Remember, when price spikes, volatility increases, and that increases the price, makes the premiums much more juicy on options too. So everybody, this is we should probably do this a little bit more. The questions are
question.
coming.
Great question.
CBDC is coming. Get used to the idea. Yeah, CBDCs for me are absolutely terrifying. Again, from my experience of seeing how governments operate, especially in places like San Francisco, California during 2020, if they had a way to force everybody to do exactly what they wanted, they would have done it. No doubt in my mind. And that's supposedly a Western civilized nation. Tesla's the 345. Tesla, biggest AI AGI play on the planet. Do not fade Elon Musk, even if you hate him. Get exposure to his assets. Financial advice right there. That's it, everybody. Try to keep it to an hour. We're exactly an hour. I want to thank Marty and CTO and Mando. The perspective of these three gentlemen is incredibly broad and incredibly valuable for life. And once again, shout out to Marty for keeping an eye on manipulation and liquidation levels. Remember, if you want to play the game, you watch what Binance does. You play their game. You trade with them. Okay, you go short when they go short, and you go long when they go long. You get their bags before they can buy them back. And Wintermute too, out of the UK with all the FX traders, basically former people that used to make a living trading foreign exchange, which is extremely difficult to do. Now they can rape and pillage from retail investors in the UK. Thank you, Mando, for that. It's true, no?
Alpha that Wintermute UK based, yeah.
Yeah, it's a far easier game than trading than dollar yen or euro dollar. Much easier. Final thoughts, guys, before the week ahead?
I mean, I'm streaming liquidation levels on YouTube now too, by the guys. They're on YouTube now as well. Liquidation levels live in high definition. Go, it'll help your trading. It'll give you confidence and security. Just go and follow it. It's a good.
You have the link you can share for that? Drop it in the chat.
I post it on my X all the time,
Okay.
but you can just go to Party on YouTube. It's live.
Okay, I'll leave it here. Thoughts for the week ahead, CTO?
I think it's a very interesting point in the market here. If this support holds, I think we can really get huge moves in the altcoins here. Like it start trickling down. We talked about it for a long time. Bitcoin moves first, then number 2, which is Ethereum, then the next block, which would include Solana, and then towards the end of that cycle is where the smaller ones move. And it's been like that every cycle. Every time everyone says that this time is going to be different, but so far it looks exactly the same, guys. So my assumption is that it's going to play out the same, and everything with ETFs and everything didn't change anything. Yep. That's my take. I think that those Wall Street people, they're going to go through the same route as we all did. You start with Bitcoin, then you discover that there's something else called Ethereum. You buy a bit of that, and then later you get deeper and deeper down the rabbit hole, and you want higher and higher gains. And I think that's the route they will go to. Suddenly, Bitcoin will seem boring, and they want to have 5x, not 5%.
Yeah. And last week, Mando, you did your rotation. First of all, about 5 weeks ago, 6 weeks ago, you rotated into ETH. And then you rotated 60% of that into Chainlink last week. You mentioned it here on this channel that you believe it has meme-like characteristics, and that's why you're playing it.
No, I converted most of it into Bitcoin and Link. So my bags are now kind of equally between those three. I would say at least my tradable stuff.
With the little JLP.
Yeah, I'm actually considering converting it all into JLP and then just having a bit more of like Link exposure on the side, but I think stick to majors. I think this Friday is PCE inflation, so expect a little bit of volatility around that. And I think it's a long weekend then in the US, so like often we see a bit of games on a Friday when there's like a macro figure like that. So maybe expect some volatility around that, but just follow global M2. I don't think this market's breaking down.
Yep, there's the week ahead, guys. AI, watch AI. If NVIDIA takes a shit, AI will take a shit. But I think they'll always impress because I know one person who's buying everything that they can produce, and I know Meta and everybody else is trying to do the same. Marty, final thoughts from you, buddy?
Yeah, I think follow global M2. It's very clear. I showed as well on my timeline. I mean, this was just a perfect double bottom by Binance to hit that 110,500, the 50% of the last market make. And I think we go up from here in quite a radical move that's going to shock everybody. Like you see there, I think we're going to run back to that line and look at that move. Yep. And it's going to catch everyone out of the trade. Don't mess it up. Don't fuck it up.
Yeah, this is Mando's actual tweet from not too long ago. Biggest deviation from global M2 in probably not 2 years, probably in 4 years or more.
It's longer. Yeah, I need to get the long term.
So-
You know, everybody panicked. Everyone panicked because they saw the little sell-off in global liquidity at the top there. Well, big news is they started printing again. China,
Right.
EU, Japan, South Korea, Russia, and the US reports their new MTU on the 28th. That's 3 days' time.
Yeah,
And we'll see if it's higher than 22 trillion. Yep.
And at this rate, US is going to have $40 trillion in debt in a very short window of time. They are adding literally hundreds of billions every week. It's coming, 40 trillion. And the question is, at what point does fiat become completely pointless? I think we're far beyond the point of no return. That's why we Bitcoin. Hard assets, everybody. Thank you, team. Appreciate you all. Have a great week ahead.
Thanks, guys. Have a good week.
night.
Good show.
Cheers.
Appreciate you all. Let's go.